Today, we're comparing two players in the hydrogen and fuel cell sector, plugpower and FuelCell Energy. We'll go through their key financial figures, market valuation, balance sheets, cash burn rates, and metrics. Finally, we'll discuss which company might be the more attractive investment. Let's dive in. Video is not financial advice or a recommendation to invest. Always conduct your own research and consult with a professional advisor before making investment decisions. Let's start with plugpower. The company's market valuation is $1.9 billion, and its revenue for Q3 2024 was $173.7 million. Plug's net loss stood at $211.2 million for the quarter, though it has managed to narrow its losses compared to the previous quarter. On the balance sheet, plugpower holds $1 billion in cash and short-term assets, while total liabilities are $1.7 billion. On the bright side, its equity stands at $3 billion. The company also benefits from a $1.6 billion loan from the U.S. Department of Energy, which supports its green hydrogen infrastructure development. Next, we have FuelCell Energy, with a market valuation of just $171 million, more than 10 times smaller than plugpower. The company's Q3 2024 revenue was $23.7 million, and its net loss was $35.1 million. FuelCell's balance sheet shows $326 million in cash and short-term assets, with liabilities amounting to only $204 million. Its equity stands at $685 million, giving it a more balanced financial position relative to its size. Additionally, the company's order backlog has grown to over $1.2 billion, though deliveries are expected to stretch out until 2026. When comparing market valuation against key metrics, plugpower and FuelCell Energy are similarly priced relative to their revenue. However, when it comes to equity, FuelCell is much cheaper. Investors pay just $0.25 for every dollar of equity in FuelCell, compared to $0.63 for Plug. In terms of net loss, Plug's losses are smaller relative to its valuation, which suggests the market has higher confidence in its potential. In terms of cash burn, plugpower is spending around $66.4 million per month, which means its cash reserves would last approximately 15 months without the DOE loan. However, the loan significantly extends its runway and enables ambitious investments. FuelCell Energy, on the other hand, is burning cash at a much slower rate, around $10 million per month. This means its cash reserves could last over 32 months, giving it more breathing room in the short term. Plugpower is clearly a growth-oriented market leader in the green hydrogen sector. Its higher market valuation and the DOE loan give it an edge for long-term growth, despite its significant cash burn and higher debt load. FuelCell Energy, meanwhile, is a smaller and potentially undervalued player. Its balanced balance sheet and longer cash runway make it a more stable choice in the short term, though it lacks the scale and growth momentum of plugpower. Thank you for watching this comparison. What do you think? Which company seems like the better investment? Let us know in the comments, and we'll see you in the next video.